How's it going, David?
Good, good. Good to be with you.
Thanks for being here. So I wanted to talk a little bit about kind of the PayPal days. And the story goes that in the early days of PayPal, kind of the original mission was to create a global currency. And you failed at that, but you obviously were successful in creating a global payment network. And many would say that to date, cryptocurrencies are really succeeding at creating global currencies, but for the most part, failing in creating global payment networks. So I'd love to hear kind of the early vision at PayPal and how you kind of see that related to cryptocurrencies to date.
Yeah, so back in the early days of PayPal, and this is going back to 1999, so it's almost 20 years ago. We actually, our first T-shirt said, PayPal, the new world currency. And so there was this idea that we were going to create this new global currency. That being said, we were always kind of dollar-based and thought we were bootstrapped off of US dollars. I think the part that was new was this ability to seamlessly, instantly transact with anyone in the world online. And back in those days, any other form of payment, it wasn't instant, it wasn't online. And so that was really, the idea was to make it instant, global, seamless, digital. But we never really tried to create a store of value that wasn't US dollar based.
Got it. So why do you think, I've always wondered this, it seems like a lot of the kind of early PayPal team, it was, you were thinking about this 10, 15, 20 years ago, and to date, even still, no one from kind of the PayPal mafia has really gone all in cryptocurrencies. I guess you were really the first with Harbor and your fund, but why do you think that is?
I think part of it is some scar tissue around, the PayPal wars were really intense, and none of us really thought we wanted to do payments again. And then I think part of it also was that, no one really remembers this, but in the late 90s, when PayPal first got started, the big competitors to PayPal, there were a couple of companies. There was one called Beans, and there was one called Flues, and these were actually alternate currencies that people had created for online transactions.
A couple of them raised $100 million.
They raised a lot of money. Like Whoopi Goldberg was the spokesperson for one of them, and they never went anywhere. And PayPal, one of the reasons why we won is because we were based on US dollars, and they were already accepted. We didn't have to try and create a new network effect. And so I think one of the learnings there was that actually doing a new currency was like very, very hard, and it was kind of doing the opposite of that. It's one of the reasons why we won, and I think that might have something to do with why the PayPal mafia has been a little bit resistant to this idea.
Makes sense. And so, regulation is obviously a big part of that, and I know you were kind of involved in a lot of the regulatory affairs at PayPal in the early days. What were some of the learnings kind of there that may apply to what we're seeing in crypto today, particularly around kind of the new project that you recently co-founded, which is Harbor?
Yeah, so PayPal had to get money transfer licenses in every state in order to be compliant. Harbor, I guess the high-level lesson that I would tell everyone is just, first of all, you have to comply with all these various regulations. And if you do and you get that right, it actually is a business opportunity, because once you're on the other side of, instituting all of that compliance, it creates a moat. And the flip side of it is, and I don't know why entrepreneurs I feel like they typically just ignore this stuff or kick the can down the road, and it's actually like precisely the wrong way of going about it. If you look at probably the most successful company in the crypto space right now, it's Coinbase. Because they really, and I think the reason is because they got all the compliance stuff right around the fiat on-ramps to crypto. They've been historically the most compliant company in the space. So if you get it right, it's really a business opportunity. And that's what we're doing with Harbor, is making ICOs and security tokens comply with securities regulation.
Got it. It's obviously kind of interesting because when you think about decentralized cryptocurrencies, it doesn't at times jive with regulation, right? The fundamental nature of Ethereum is that it's permissionless, and there are ways to put permissions in smart contracts, but some in the crypto community would argue that that might be kind of antithetical to kind of decentralization, right? So how do you think about that related to Harbor? And maybe for those that aren't familiar with Harbor, you could talk a little bit about exactly kind of what you're doing with the R token standard that you guys have established.
Yeah, so Harbor is a platform for the compliant issuance of security tokens. A security token is just, the token is a digital representation of an ownership interest. That ownership interest is a security. And so there's a bunch of compliance that has to be layered on top of a token in order to make that work. To kind of go back to the beginning, the Nakamoto white paper was for digital cash, and the original design was for Bitcoin to be, basically an anonymous or pseudo-anonymous bearer instrument. If you had the Bitcoin or the token, then you were the owner, and there was no central authority to kind of appeal to. The problem when you start talking about security tokens is that that sort of anonymous bearer instrument idea, it's a feature of digital cash. It's a bug when it comes to security tokens because you have to. There's just so many KYC rules around securities in the U.S. and other countries. So in the 1980s, the U.S. outlawed bearer bonds. In 2001, with the Patriot Act, the U.S. outlawed bearer shares. So the idea of securities as just anonymous bearer instruments is illegal here in the U.S. and about 30 other countries. So if you are going to use tokens as securities, the first thing you have to do is solve that problem.
Got it. And so how do you think about utility tokens versus securities tokens? And I think one question would be, where do you see kind of the early use cases for Harbor, right? Because I think on one hand, people are excited about tokenizing real estate and traditional securities, which we have a panel coming up after this about that. But on the other hand, I think there is gray area on even kind of crypto native projects and whether some of those are securities. So I'm curious how you think about that, and particularly where do you see the early kind of demand coming for something like Harbor?
Yeah, so I think we are, so at Harbor at least, we're focused right now, I think, on getting to this, getting to tokenization of traditional assets. So we are very interested in tokenizing real estate or interest in REITs, for example. I think tokenization of fine art is another really interesting asset class, and I think there's other ones. There's a whole separate debate about whether utility tokens are securities, and we don't really take a position on that. I mean, we didn't develop Harbor to impose compliance on utility tokens. I think the people involved in those are going to have to decide what level of risk they're comfortable in taking. Mm-hmm. I mean, I think we're not really operating in a gray area. We're operating in an area where we know these things are securities and have to be regulated that way.
Got it. What about for things like decentralized exchange, right? Where, again, it's still very early in decentralized exchange, and we'll talk later about it, but we're starting to see some meaningful volume on several relayers on top of 0x and things like this. And right. For the relayers, I think there is also some kind of gray area on what the KYC is and things like that. And do you see Harbor as a potential compliance layer that that things like relayers on top of 0x could use?
Yeah, so I'm a big fan of 0x and what they're doing. And I think they recently announced a feature where they can add permissioning on top of liquidity pools. Because when you're in a world of trading securities, you have to know who your counterparty is. You have to KYC them. Mm-hmm. Again, very different than if you're just dealing with anonymous bearer instruments. But I think the way that Harbor is approaching this is we're actually trying to bake compliance into the token itself. So, I mean, the way it works, this is published in our paper on the R token or regulated token standard. The R token, it's an ERC20. It's just layered on top of the ERC20 standard. So we're talking about a standard here. It's a type of token, not a token itself. And it contains about 300 lines of additional code to check a whitelist before it trades. And if the counterparty is on the whitelist, they've been verified and approved, the trade goes through. And if they're not, it throws off an error message and the token simply won't transfer. And so we've baked that into the token itself, and what that gets you is it guarantees compliance no matter where or who the token is you're seeking to trade it with.
Yep. Yeah.
I mean, so the approach that other people have taken is more of like a walled garden approach. So we've heard from various kinds of generally centralized exchanges that they're planning to list security tokens, but their approach to it is generally to verify all the participants who come into the ecosystem. The problem with that is if they're planning on issuing security tokens, what happens when those tokens start getting traded P2P
Yep.
outside of their walled garden? You don't get the compliance. And so the problem with that is that the issuer of the token is actually on the hook legally. Mm-hmm. And so we don't think that approach works. We think you have to bake the compliance into the token to correct this kind of anonymous bearer instrument problem that we talked about.
Mm-hmm. Got it. So it's interesting because we were sitting in New York last year at the first token summit, and security tokens weren't even a category, right? And we've got a few things that we're talking about here today that 12 months ago they didn't even exist. So I think that's a sign of just how exciting the space is right now. But I'm curious, outside of security tokens, for you, I know you're also involved with your venture fund, Craft Ventures. What are other things that you're excited about these days in the crypto world?
Yeah, so we closed in January. Closed a $350 million venture fund. It's crypto is a major theme, but it's not the only one. Actually, the relationship between Harbor and Craft is last year, when we were thinking about raising this fund, one of the first questions we asked was, well, could we raise our venture fund by doing an ICO? And we seriously thought about that. And we started looking into, could you do that? And the answer is no, you couldn't really do it at that time because of all the compliance and the regulations. But that kind of planted the seed. Well, what if you could solve those compliance problems? Then you could actually have compliant fundraising on the blockchain. Mm-hmm. And so we thought that was a really exciting opportunity. So we ended up doing both. We incubated Harbor, and then we also launched Craft as a venture fund, but raising the money in the traditional way. I think, from in terms of like other things that we're interested in investing in, we've come to see the crypto world's gotten so big now that you kind of have to pick and choose your areas. Mm-hmm. And I think we've decided we're going to focus on this security token area. And so we tend to see the world through a very kind of Harbor-centric lens. But there are a bunch of interesting things happening that we've now supported that we think will be complementary. So for instance, we just invested in SET Protocol, which allows you to create a basket of ERC20 tokens, and that basket now itself becomes an ERC20 token. So if you think about eventually we're going to have a flood of security tokens. The next step will be to create portfolios out of them. So we think the SET will be very useful for that. We have invested in 0x because we think, the discovery of counterparties in a infinitely tokenized world. So when, centralized exchanges work great when you've got like a relatively limited number of tokens, but we do think that the number of tokens, especially once you can tokenize every asset in the world, is going to grow exponentially. And I think in that world where there's this tremendous long tail of tokens, finding counterparties is going to be the big problem. And so, we're big fans of 0x for that reason. And we made an investment in BitGo, which is the leading solution for institutional custody of cryptocurrency, which again, if you're going to be in this infinitely tokenized world and you're going to have institutional investors, they've got to hold their crypto with a qualified custodian, another big compliance problem. And so we invested in BitGo to solve that as well. Got it.
So I guess getting back to Harbor and security tokens, we're at a point where it's a brand new category. It's still, I think, unclear what are going to be the early kind of use cases for Harbor, right? And security tokens. I think there's a lot of excitement around it, but there's not really kind of the combination of issuers and consumer demand. But taking a look 5 years, 10 years from now, what do you see? What direction are we going, and what is like the inspiration behind Harbor from a long-term perspective?
Yeah, well, I think you have to ask what's the value proposition here, and the value prop is being able to bring more transparency and liquidity to different types of assets. So if you take real estate, for example, I think just in the United States, there's about $7 trillion worth of private commercial real estate. So not residential, just investment commercial real estate. Whenever an asset is privately traded instead of publicly traded, you get what's called an illiquidity discount, where it's just worth less because the trading of it is less liquid. It's hard to basically sell the position if you want to get out of it. And you typically have to go through these networks of broker-dealers, and there's not very much transparency. It's difficult. If you can bring liquidity to that asset class, you can unlock, say, 20%, this discount, which would be, just in the case that I mentioned, 20% of 7 trillion is 1.4 trillion. So there's enormous, I think, potential to bring value to these different types of assets by essentially blockchaining the assets, tokenizing the security interests.
Mm-hmm. Got it. And I think you and I talked a couple months ago about kind of this idea of basically individuals that have particular knowledge on, say, real estate, being able to kind of go long a certain category in real estate. Talk a little bit about that kind of idea.
Yeah, I mean, so this is where it starts getting really interesting. So let's assume that you start, that real estate starts getting tokenized. And the first one's going to be the hardest, but then the second one will be easier, and the third one will be even easier, and then eventually I think you're going to see a flood. So we're now talking about a world in which you've got tokens to be able to buy interests in real estate in different parts of the country. If those tokens, let's say they're ERC20 tokens, you can now create portfolios out of them with SET. There's a different startup called DYDX, which is creating derivatives based on ERC20 tokens. So using DYDX, you can take any ERC20 token and create a short out of it, or a put or a call, basically create a derivative. And that derivative is itself an ERC20 token that you can trade. And so, what that means is you'll be in a world in which you can actually do things like short real estate. And you'd be able to express, if you wanted to take a position like, I want to go long Manhattan and short San Francisco, or even let's go long this block of Manhattan as opposed to a different block, you'd be able to express those positions in a very, very fine-tuned way that you could never do before. And amazingly, there is no way really today, if you wanted to short real estate, there's no easy way to do that. Now, when a building owner decides that they want to tokenize, they're not thinking about any of this stuff. They're just thinking about, how do I get the best price for my building? And I think they're going to be able to do that because the crypto markets will provide the best price because they're the most liquid. But as a result of that happening, you're going to get all this follow-on functionality kind of for free because, this is an ecosystem that people are building around.
Got it. Okay, well, we're about out of time, but thank you very much, David.
All right, great. Thanks, Nick.